these are the rules for the trade setup. I know I said I was going to do this after the first half an hour, but then I got stuck. So these are the rules. Step number 1. Here, I'm going to try to make a thing out of this, where I just shut my charts off so I can do this without stopping and stepping into trades. Okay, step number 1 is identify the trend. To identify the trend, you have to have higher highs and higher lows, or lower highs and lower lows. Now, if we look at current market conditions, right here would be a trend on crude oil. Okay, that would be an acceptable trend. Higher highs and higher lows. Okay, if we were to look a little further, the ES hasn't really been a very good trending market today. But on gold, for instance, right here would be lower highs and lower lows for a trend. Okay, and if you look at this picture right here, that's pretty much what we got going right there. Lower highs and lower lows. That's step number 1. Identify the trend. Step number 2, the MA1, which is the red and blue line right here on price, crosses the BBC, which is the green line on price, in the direction of the trend. So in this case, the MA1 crosses below the BBC because the trend is down. So it crosses down below the BBC. BBC stands for bull bear cross. Bull bear cross. Okay, so right here, for instance, the trend was established as down. The MA1 crossed below the BBC. Bull bear cross. It's bearish. Cross below it. All right. Step number 3, price closes away from the BBC after the cross. That means, you can see it in the picture right here, step number 3 points to this blank space. But here in real life, it was right here, this blank space. After the cross, you have a bar that is closed, that is pulled away from the BBC. Okay. Step number 4, price pulls back up and touches the BBC like it did right here. Okay. And right here, price pulled back up and touched the BBC like it did right here. Step number 5, down here in the slingshot, you want the cycle to be red and below the green line. I'm not sure about this cycle, red and below the green line. Yeah, here it was, red and below the green line. Okay, that's what you want to have. Your point of entry, see in the screenshot, it hit the BBC and closed down on the same bar. So your point of entry here would be the down close after this bar. But if it doesn't close down, it's going to be the next down close after price hits the BBC, the next down close. Now this trade here that I did today was a better example of that. You see, this is the first bar to hit the BBC, but it didn't give a down close. The next one was also on the BBC, but it didn't give a down close. The next one finally gave the down close. So that was my entry point, this down close right here. Okay, now you note that I do not have a trend line drawn. Checking the trend here. You don't need it in this case because we hit the BBC and the cycle is the right color. Now in the rules, it shows right here, the cycle is the right color and below the green line. In real life, when it did this today, the cycle was the right color and below the green line. And this one, I don't know if you guys remember a few minutes ago when this actually happened. I mean, I told you exactly what I thought it was going to do. I gave you this number down here at 51.2. Whatever it was that I gave you down there. I told you exactly where I thought it was going to go, and then I think I got most of that. I didn't get all of it. I think I got 7 on possible ticks onto that one, I think. No, that was this one over here. I said it was going to go down to this number. But still, this is the same thing. See, we had the trend right here, identified by lower highs and lower lows. The MA1 crossed below the BBC. Price pulled away from the BBC. It pulled back up and touched the BBC right here. Okay, now this isn't the bar that closed down. It was the next one that closed down. That's the one that I went on, was the down close right there. Now in this case, you can hardly see it behind the green lines here. If I take those off, I really don't want to, but let me just change the color of them. If I take those off, see there you can see the trend line. that I had drawn down there. That was my target number for it. And I didn't know what the target number was until the trade triggered. Same thing over here. I didn't know that target was there until the trade triggered. But it was a nice target to go to. In both cases, it was a nice target to go to. And when price went to it. So the actual entry point is going to be the next down close after price touches the BBC. In the picture, it happened to be the same bar. Okay. But that's not always going to be the case. Right. Now, if price does not hit the BBC, okay, or if the cycle happens to be the wrong color, see down here, the cycle is the wrong color. In this one right here, price didn't hit the BBC. Hang on, let me move this over. In this one right here, price didn't hit the BBC and the cycle was the wrong color. But our trend was obviously down, right? We had all these downs, all these lower highs and lower lows. So the trend was obviously down. The MA1 crossed the BBC way up here. It gave a trade here, gave another trade here, and it gave another trade right here. Now remember, the markets are always doing the same thing. They're going up and down and up and down and up and down and up and down and up and down. And what I want you to do is get these pieces out of the middle, like this and like this and like this and like this. This one right here you would have to skip. But get this piece and this piece and this piece. That's what I want you to do. And that's what I do in front of you every day. I don't get every piece, but you don't need to get every piece. You just need to get a couple of them. And the higher probability ones, if you wait for the higher probability ones like this right here, where it's red, this is your second highest probability trade, right? Your highest probability trade was that other one. Actually, not that one. This one right over here was your highest probability trade because it was red when it hit the BBC and gave the down close. This is like your third highest probability trade. The MA1 change color. This right over here is your second highest probability trade. Where the MA1 stayed the same, the cycle stayed the same, you got to pull back, it just didn't hit the BBC. All right. But if it does not hit the BBC and or the cycle is the wrong color, that's where the trend line comes into play. Now earlier, there was a statement that it was a statement / question. The trend lines are arbitrary. No, no, they are not. The trend lines are exact. They are precise. They need to be. Otherwise, they're meaningless. When you're drawing a trend line, you start here at the top of the wick like that. If you have just a body like this one, then you just draw it on the corner of the body. Okay, like that. You draw it on the corner. That's not even on the corner. Like that. Okay. And then you would be looking for a close on or above the trend line. It doesn't have to be on like this. It can be just a little tiny bit on, like that. I'd still call that on or above the trend line. Why is this a trend line? I mean, I know it's going against the overall trend. The overall trend is up, and this is a line that you need to break that would confirm continuation in the trend. Now, I could call this a lot of other things. Trend line is just, it's what it's actually called over here. If you grab this, it's called the trend line. Now the trend is up. Okay, I didn't say it's an uptrend line. It's just a trend line. It's just a nomenclature. It's just a word, right? That has come to rise in the last couple of weeks. Why do you call it a trend line? I don't make up the names. Well, that's not exactly true. I do make up some of the names, but I was going to say I don't make up the rules, but that's not exactly true either. But anyway, what you're looking for to continue the continuation of the trend. Okay, the trend is up, and you want to see a break of this level. Now, a level you would consider something horizontal, like this level or this level, but this is also a level. You want to break that to confirm that it's going to continue in that direction. Okay, so your entry point, those are the triggers. The actual point of entry will be the down close of this bar. So in this case right here, you're looking, this is gold. So if this bar had a high here of 90, let's say it had a high of, let's say 49 even, it's going to have a low 38.6. I'm sorry, 48.6. So your down close is going to be there at 48.6. So you're going to go short there at 48.6, or if you want to be proactive, you could put a sell stop one tick below that at 48.5, and then you'd be entered in the trade for sure. Otherwise, if you wait for it to close and then you put your order on, you may not get filled. And you'll see that happens to me a bunch of times. I've shown you a bunch of times today where that's happened. If I'm able to be proactive, if I'm in the moment and I'm thinking about it, I can put my order on and be proactive and then get into these trades every time. And that's all you have to do again and again and again. Now, we had a few stop outs here. This is gold. We had a few stop outs in gold. I told you we kept going back and forth and back and forth. Like I get 8, get back 8, get 7, get back 8, get 8, get back 7, or whatever. Like we had 4 stop outs, right? 1, 2, 3. 3 stop outs. But that's all you have to do. Those are the rules for the trades. Okay, the rules for the trade setups. Now, right in here, you see how we had bullish separation down here. Price came down, it hit the BBC. Right here, it hit the BBC. Now, you stop adjusting the trend line once price hits the BBC. So right now, it closed up above the BBC right here. I don't have any trades on right now. Well, everything's shut off, but I don't think I have any trades on right now. But right here would have been a spot to go long. Now, if we look at this, when I turn everything back on, we'll look at it. It was right here. Okay, just highlight it and draw a line on it. We can come back and look at this in a minute and see what it did. Now, what you anticipate is that the green line is going to turn up and work its way up into the cycle right here. Okay, when it gets up into the cycle, you should have a higher swing in place. Okay, so you anticipate, you anticipate a continuation of the trend, and that's what's being shown down here. You see the long-term cycle gets up and it stays up, and the short-term green line moves away from it and back into it, away from it and back into it. It undulates away from it and back into it. And so that's where you want to be taking your trades. When it pulls away, you get in. When it gets back into it, you get out. It pulls away, you get in again. It gets back into it, you get out. What you anticipate is that it's going to get back into it. So you have to manage your trade accordingly once you get into it. And that's when, if you don't know how to read the DOM yet, then I'll teach you how to do it over time. And while you're learning, you can just listen to me because I'm just going to read it to you as I see it. But like right in here, I don't know what happened and I don't know what the DOM looked like at that time. But I would have been looking up here to see if there's a good spot for it to run to. Okay, we get the actual trade setup. All the charts are saying, okay, there's a trade setup right here. And then I'd be looking at the DOM saying, okay, well, we've got a trade setup. Do we have a good place for it to go to? And you'll hear me say, especially on crude oil lately, you'll hear me say, I don't see where this is going on the upside, but the charts are giving it to me. The charts are saying up. So I would say, okay, we're going to go with the charts, and then we'll see if something shows up. And a lot of times it does. Most of the time in the middle of a trade, in the middle of a trade, you're going to see, I'll see something pop up, and I'll say, okay, well, there it is. Now I see where we're going, and I'll draw you a line like that. I'll say, okay, we're going up there. Now, I don't know that that's a valid thing right now because I shut everything off. But we can go back and look at this and see if the green line did in fact get up there. And if it didn't, what happened in here? Did you have enough room to get your stop to break even? You see, because right here, all you needed was a close above the MA1 to move the stop to break even. You see how close the MA1 was to the price. So there's a good chance you're going to get the close above the MA1 before you have 4 ticks in profit on this particular case. Okay, so let's turn everything back on. Does anybody have any questions before I turn it back on? And we'll see what we ended up doing here. I mean, you can see I didn't do anything, but we'll see what actually did happen. Then we can look at it a little bit better. Let's see what did happen. Here it was. So right in here, I mean, perfect, right? Green line got all the way up into the cycle. You got your highest swing, went right up there, pulled back, and gave you another one. So it all came together just right? I'm waiting for everything to come back. Here it is. So it all came together just right. So you would have drawn another trend line down here like this because the cycle was the wrong color. You would have gone long right here because the black step line never got below the BBC. So you had this long right here up to the top. You had this long right here where you anticipate up to here. The green line gets up into the cycle. You exceed the prior swing high. Everything came together. And if you missed those first two, there was another one right here. Now, I don't know what the DOM was saying, but I bet it was saying there was something right here, and then it was something up here. Okay, those are the rules for the trade setup. And if you look at this in the handout section, you can download that. It's all written down in here. One, identify the trend. The MA1 crosses, price closes away, price pulls back to touch it right there. The slingshot is right, cycle's red and below the green line for a short, or blue and above the green line for a long. The entry criteria is if price hits the BBC and the cycle is the right color, it would be the next close away from the BBC. If it's not, then you have to use the trend line, and it's going to be the next close on or above the trend line or below the trend line, depending on what direction you're going in. And the risk management. Move your stop to break even after you get 4 ticks in profit or a close on the MA1. It's the same thing over and over and over and over again. You do it every day, all day, over and over. See right here, we had this is your trend, this is your trend, this is your cross, this is your pullback, this is your down close. Down here, separation, cycle is red. Right here is where you're going to go short, right there. You're going to go short. What do you expect? The green line to get down into the cycle. When it does, what do you expect? It's going to pull back and do it all over again. Then what do you expect? The green line is going to get down into the cycle. Then what do you expect? It's going to pull back and do it all over again. And it keeps doing it until the black step line crosses the BBC or the cycle moves up against you. Okay, so this is just a little bit of a run. This is actually a retracement run from this move up. But it did give 2 trade setups in here. Okay, it gave this one and it gave this one. This is actually from right in here. So if I drew the trend line here, you didn't need a trend line on this one because you hit the BBC and the cycle was the right color. If you missed that and you took it again, you could have taken it again off the BBC right here for 8 or 10 ticks. If you missed all of that, it would have been this down close on the trend line right here for another 8 or 10 ticks. And now it's turned around. Everything's changed in direction. We have higher highs and higher lows now. We have bullish separation down here. So it's all coming together like that. Okay. So that's what we do. That's the way the markets work. And that's what we've been doing for years. It's the same thing again and again and again. There's another one right here on gold. And, you have to do the same thing again and again. The only way to get consistent results is to perform consistent actions. See, on gold, where's it going to go? Where's it going to go? I think right there. It's a good spot. I'll lock in 3 ticks. That would be 5, 6, 7 if it gets there. So I'll take 3. But I think it's going to go further. I think it's going to do it again. The green line is up into the cycle. It's time for it to pull back and give us another shot at it. I think it's going to go further than it just did. I think it's going to go up to 57.1 is where I think it's going to go. Okay. So I just grabbed 3 ticks from this, doing exactly what I just told you I was going to do. Right. And now if we get another shot at it, see, the cycle is still blue. So if we get an up close right here and that cycle stays blue like it just did, then I'm in, and I'm in. Okay, I'm in at 55. And where do I think it's going to go to? Up here, 57.1. What am I going to do with my stop when I get 4 ticks in profit? Bump, break even. 1 more tick. There it is, break even. Now I don't have any risk on the trade. How nice is that? I could make $160 in the next minute here with 1 contract and not have a care in the world. Because I'm not going to lose any money. And so now I made just a little bit because that paid for my commission and left a little bit extra for me. Okay, so now I'm going to take the order off and we'll see if it does what I thought it was going to do. It's probably going to go up, not go all the way up there, pull back and give us another one. That's what I think is going to happen. Okay, but just following the rules, I did everything right. Okay. Pretty easy stuff, right? See right here with crude, went down, went up, went down, went up, went down. Now it's going to go up, and then it's going to go down again. So right now, while it's down is when you look for the next target on the downside. When it's down, I don't see anything, so it looks like it's probably going to bounce around quite a bit right here. But the up spot is right here. This is where it wanted to go on the upside. So now it should start dropping. I just saw a number. It just passed. It's 1179 is the only thing I see. And there's 1179. Now we got to see down below 1179. I don't really see anything. So crude's kind of messy right here. But over here on the ES right now, you see it's starting to do everything right here on the ES. And on the downside, there are some numbers on the downside on the ES down at 45.05 and a half. And here's the short on the ES. So 45.05 and a half right now is where this is trying to get to, right there. Okay, so you see everything came together. We have lower highs, we have lower lows, we have the cross, we had to pull away, we had to pull back up and test. We gave it down close, but right now the cycle is the wrong color. So this one needs the trend line, right? So you have your trend line. There's a down close on the trend line. There's your short trade. So now you got your short trade and you have a target. So now I put the trade on and I have no risk on the trade anymore. So I'm going to put a target down there where I think it's going to go, and I'm going to lock in some profit. There it is, all the way down there. Now that was from 75 up here down to 50 down there. So that was 112 bucks, 112.50. Just again and again and again, it does the same thing. Okay, it's putting together another one right now. It gets down into the cycle. It's time for it to pull back and do it again. It's doing it again. Over and over and over again. You see? It is, isn't it, Daniel? Amazing how simple it can be. See, here it is again. There's another trade. I mean, it's what did I get on that last one? 9 ticks. Hey, that was my first registered trade on the ES. I had a break even, and then I had that 9 tick trade. Right now, where's it going to try to go right now? You guys tell me. Tell me where it's going to go. I see like 3 different spots that it's going to go to. Anybody?
45.05. 45.03.
Yeah, 45.05 is the first one. That's good. See, I took my risk off the trade already on this, but 45.05, I thought I liked 45.04 and a half, and then 45.03. Yeah, there's a group down at 45.03. But see, I was kind of playing with that one, not really focusing so much on locking in profit. But again, there, see the green line's gotten down into the cycle. Now look at this right here. See the green line got all the way down into the cycle, and now the cycle is starting to pull up with the green line. So you're not going to expect it to do that anymore. All right, this is when you stop going in that direction. And see how the colors are all changing here and everything? That's suggesting that you're getting toward the end of this run, or you're going to have a cycle reset. Okay, so all these things that I was looking for over here on gold, they happened. And now on gold, it still wants to go up further, 1959 on the upside on gold, but it does have some strong pullback spots. Pullback spots are down here, right here. So it could go either way. Crude oil right now is really, really thin. I really don't want to trade crude. It's got a spot right where it was at 1236, and I don't see anything else. I really don't see anything else. So here's all those numbers that we just said on the ES a minute ago. Okay, and it still wants to go down, 45.02. That should be coming up here. We don't have a trade set up for it, but it's still coming. Okay, it's going to keep going all the way down to 4,500. We're going to put in a new low here in the next couple of minutes. New low on the day is coming up. We need a pullback to get the green line up above the cycle to be able to take the trade. But if you grab this one from over here, and when I was paying more attention to it, then I probably would have let it run a little bit more. Not too much. I probably would have gotten out right down here and taken some profit on it. But it's the same thing again and again. I think she stopped the recording earlier, Daniel, when the phone call came. I think Val cut the recording off then. Nope, it's still going. Hey. I don't know, maybe she turned it back on. Well, I guess we could take bits and pieces out of this, right, Val, if we wanted to, for training purposes. How do you spot those targets? Well, it's obviously something that we can all do because Val just did it for all this stuff right here. And the 4502 numbers that I just gave you, they're coming up right now, and you did have a trade set up in the low of the day. That's coming up right now. And the trade set up for the 4502 numbers is right in here. Okay, right there. And now the low of the day, it wants to go through it down to 44.98. 44.98. Here's the new low of the day, and it still wants to go down even further. Okay, again, I'm going to throw my stop. This time I'm going to lock in some profit. 6, 8, 10. Here's my 98 number. See, I'm not making it up. I'm just taking what the market's given. And I mean, it's there for all of us. Here's another one on the ES. It still wants to go down some more. On the downside right now, 44.94 is what I'm thinking. Okay, it's got to pull back soon though. But 44.94 is what I'm thinking. It does have another short. I got in it. I'm going to get a break even on this one, I think, because it wants to pull back up. But I would go for 44.94 if I could get it. Maybe 12 ticks if it drops down there. This will be my last trade of the morning. I'll take it right here. 2, 4, 6. So I got half of it. All right, 6. We'll take it. All right, and I didn't even realize it was a weekly trading zone down there. All right, so we went right down into the weekly trading zone. Okay, normally I won't trade into a zone. If I didn't know it was there, I'd have just let it run.